Just as Zip's share price was near a 7-year low, the buy now pay later firm sold the shares of nearly 70,000 small-time investors.
It was an initiative that was a few months in the planning, and we had a very large register that was very costly to maintain.
The week before the sale facility was announced, the company's chair, Diane Smith-Gander, and another director, Meredith Scott, bought a substantial amount of Zip stock.
I think the purchase of shares by the key executives was a demonstration that they believed in the future of the company and a strong signal to shareholders.
Zip announced the sale facility to the ASX in October for shareholders who hold less than $500 worth of stock. It said they wouldn't incur any brokerage costs. The catch, if shareholders didn't want to sell their shares, they had to opt out by completing a share retention form and returning it to the company's share registry by 5 p.m. on November 20. The ABC has spoken to some shareholders who only knew their shares had been sold once they'd disappeared from their brokerage accounts or when they'd received a statement showing their balance of Zip stock had been reduced to zero.
Investors were very well informed, both in the correspondence that they received from us and also in the communication that was delivered to the market via numerous releases about the performance of the company and the process.
A day after the sale facility launched, it was revealed both directors had bought shares the week before when the average share price was about 27 cents. They complied with the rules, but some small investors feel they were unfairly treated as the directors made substantial gains while small shareholders had their stock sold. 4 days later, shareholders received an email about the share sale with no mention of being able to opt out, but there was a link to the form that allowed them to keep their shares. A fortnight later, the company announced it had returned to profit. The sale facility closed almost a month later, and in an update to the ASX in December, it was revealed more than 8,000 shareholders had opted out, while almost 70,000 had seen their shares sold. They were paid just over 40 cents a share. Since then, the price has more than doubled. Corporate watchdog ASIC says it's had a small number of complaints about alleged misconduct over the notice, but there was no evidence the company broke the listing rules. ASIC says there's room for companies to make it more clear to investors what action needs to be taken to retain their shares. But it's not ASIC that sets those rules, it's the Australian Securities Exchange. It says the rules won't be changed and it's up to companies whether they ask people to opt out or opt in.
A company should give enough notice of an opt-out, and shareholders that don't want to sell their shareholding then have an opportunity.
While it hasn't broken the law, it's left thousands of aggrieved investors in its wake.